Hey everybody, Flip and Danny here, founders of the Freedom Real Estate Group family of companies, and welcome to another episode of our podcast, which is called
Freedom Through Passive Income.
That's right, and this episode is called Generational Wealth Part Trace.
Trace,
because we already did uno and dos.
Okay.
Part 3, this is called the Stepped Up Basis, and before we get into this, quick disclaimer, we are not attorneys, we are not accountants, CPAs, vegetarians, any of those other things. We're not those.
No, we're not.
We're not any of them. Nope.
So let me explain why we're doing this one.
Yes.
I was on a coaching call and talking to some of my coaches who are in the multifamily space, and they're doing exactly what we're doing. And I said, are you doing all these, some of these for short term, 3, 5, 7 years so that you can sell them and then reinvest, wash, rinse, repeat type model, or are you holding them long term? And he said without hesitation, we're holding these long term because we all intend to use the step up in basis to be able to pass these on to our future generations.
Right.
And avoid, a lot of the tax liabilities that you would have in certain situations. So we thought this is really another great topic to talk about because a lot of people don't understand what the step up in basis rule is or step up basis. You can say it both ways, but it's the same thing. So here's how it works. And we're going to use our 56 unit apartment as an example. So let's just say our cost basis for the 56 unit apartment all in is $2 million. Okay. And then let's say that the current market value of it is $8 million. And now we have a choice, Flip and I, to pass this on to a beneficiary, either now while we're alive or after we die. Now, we're talking about generational wealth here, right? So typically this would be passed down to a family member, not while you're alive. You're going to want to do it when you die, and here are the reasons why. So if you pass this on while you're alive, or if we did, but we don't have kids, the cost basis then transfers to the recipient. So let's just say that we passed it on to one of our nieces or nephews. The cost basis of our $2 million is going to pass on to one of our nieces and nephews.
Right.
But if we waited until after we passed away, then the current market value at that point in time, and let's just say it's $8 million, is now the cost basis for that niece or nephew.
Meaning like leaving it to them in your will.
Yes.
Right.
Yeah,
Okay.
exactly.
Okay.
Thank you.
Yep.
So that's a difference of $6 million, right? Of tax liability that beneficiary would have had we passed it on while we were alive.
Right.
As opposed to after we passed. So that is super, super, super key.
I apologize for interrupting this episode, but I do have a quick announcement. You see, this is how we show the social media algorithms that you actually like what we're sharing on these episodes. So, if we're adding any kind of value over this 365-day series all throughout the year, we hope that you'll help us out by sharing the love. So, make sure to hit that like or love button right now. And if you're on YouTube, be sure to subscribe to our channel. Now, back to the show.
So an example would be the $2 million that we purchased, $8 million current value that we already talked about. Let's just say your nieces or nephew decided they did want to sell and they sold it 2 years after we died. And at that point in time, they could sell it for $9 million instead of $8 million. Their tax liability at that point in time, $1 million.
Right, because they got it at $8 million, sold it at $9 million, $1 million.
Yes,
Yep.
Exactly. So that's huge when it comes to preserving wealth and being able to transfer it down to heirs and to other people. And it's all about the preservation, right? We always talk about the rules of money. What are they?
Spend it.
No. Make it and keep it.
I'll get that right one of these times.
The third should be passing it down with the least amount of tax liability possible.
And then spend it.
So this doesn't have anything to do with estate tax limits either. In 2022, they're a little over 12 million. So just depending on, the amount of wealth that you're intending to transfer, obviously that's why I flipped the disclaimer at the very beginning of this video so that you could talk to, your tax professional, your legal professional about everything that's going on. Right.
So what you had just talked about is if they got it and it was at $8 million, and then they sold it for $9, so they had the $1 million that's taxable. But if we signed it over when we were alive, then it's still $2 million. to them.
Still a cost basis of $2 million.
Right.
Yes.
And so then if 2 years later we pass on and 2 years later they said, oh, let's sell it at $9 million. Now it's a $7 million.
You got it. You nailed it, Flipper.
That's right. I'm smart.
No, I appreciate you, talking through that, because it's really the example. And sometimes when you're listening to something and not seeing it, it's very hard to, just understand everything that they're saying. I know when I'm listening to things that people go through numbers, and I'm like, nope, I need to sit down, I need to see it, and figure out how it works. Now, this also doesn't, if you're watching this video and tax law has changed due to, administrations, future administrations, current administrations. If anybody's changing tax laws, obviously.
Which way the wind blows today?
Yeah. Obviously, you need to revisit the topic and really, find out what the current, rules and laws are with that regard. But the two big takeaways that we want you to take away from this episode are, number one, the step up in basis is going to reduce potential capital gain taxes for the beneficiary. Number two, this is one of the most tax efficient ways to accumulate and pass on wealth for future generations. And that's why we wanted to talk about it, because generational wealth is a hot topic for people with families, because obviously they're working really, really hard for 40 years, 50 years, 60 years to accumulate a bunch of wealth. They want to be able to transfer it
and pass it down.
As much as possible. So.
Excellent.
Yeah.
Well, we like to keep these as short and sweet as possible. So we hope you enjoyed this episode. If you're listening right now, we hope you enjoyed this podcast. Make sure you do check us out on one of the social media platforms. YouTube, make sure you hit the subscribe button. Facebook, make sure you join our group in there, which is facebook.com/groups/
Freedom Through Passive Income.
There we go. And then on LinkedIn, again, just go to the search bar and type in
Freedom Through Passive Income.
That's right. The whole team's in there, so make sure you get in there. If you have any questions for them, if you have anything you want to point out, make sure you do that. But make sure you hit the heart button, the like button. Make sure you subscribe on our channel. But let us know how we're doing. If you have any questions, let us know. If you have any recommendations, let us know. But we always like to end with
invest smart,
live happy. Bye, everybody.
Bye.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions and information on this show are not guaranteed. All investment strategies have the potential for profit or loss, y'all.